Warning. This video and all other videos on this channel are for entertainment purposes only. The content of this video and all other videos on this channel are the opinions of the creator only and do not constitute legal, trading, investment, or financial advice of any kind. Investing carries a high level of risk and the majority of retail clients lose money. Do not invest any capital unless you understand the risks and you are prepared to lose it all. Right, hello and welcome to Camel Finance. I'm your boy Camel, and today, I'm not going to lie, I don't have much to say. I honestly don't have much to say. We're going to save it for the weekend's deep dive. The big thing, as I'm sure you're well aware of by now, is today at 1:30, this is GMT, we've got the US PCE coming out, okay? So this is the Fed's preferred inflation metric, and we are going to find out whether or not there is any merit to the current sticky inflation narrative. For anyone that's familiar with me, you will know I do not subscribe to this idea. I believe that we are just about to begin another continuation of disinflation, and thus I largely expect these prints to come in cold, at least in line with expectation, if not below expectation. I'm expecting this to act as a bullish catalyst, and, you know, we're going to find out, right? I'm going to be right or I'm going to be wrong. And again, we'll come back tomorrow for the weekend's deep dive and have a good look at this. Yesterday, we got more GDP data, didn't we? For the US. And it came in at 1.3%, which was expected. But the thing that I can't get away from is that's below the prior month, which of course was significantly below the prior readout. So what is going on here? Is growth actually slowing? I thought this was a booming economy. I thought everything was fine under the hood. Apparently not, right? Apparently we might have to be entertaining recessions in the not too distant future. Again, I'm going to save this for the deep dive because one by one these dominoes are falling. And largely, this is not a laziness thing, by the way. I want to come back tomorrow because once we've got some weekly closes behind us, then we will be able to have much more confidence in making any assessments based on the charts. Some of you may well have seen this before. This is Bitcoin overlaid against the Wall Street cheat sheet. For anyone that doesn't know, the fractal here in the Wall Street cheat sheet is the weekly NASDAQ chart from the dot-com bubble. The big thing I wanted to point out here is I was talking about if indeed we're about to set the third angle, and I know, again, a lot of people don't even like the idea of that, let alone think that it's possible. But if indeed we are about to set a blow-off top angle in the not too distant future, I was saying that you would expect to see them start to ring the bell in the mainstream media. You'd expect to see headlines such as Wall Street embraces crypto, since we've now had not just Bitcoin but also Ethereum ETFs approved. There's this whole stuff with the government also embracing crypto, right? We've got one political party in the US now running and saying that they're going to undo all of the current political parties' anti-crypto type of work. I said we would expect to see the hype build fast. We would expect to see them try their best to whip up as many people into a FOMO frenzy. I said we should also expect to see headlines saying things like Bitcoin is up 400 odd % off the lows, is a super cycle next. But of course, we will no longer be early. Now, why am I bringing this up again? Because you may well have seen this. Okay, we're now back at this part of the cycle where we have celebrities coming out and shilling their new tokens, right? Shilling their new altcoins. I don't know anything about this. I don't even really know who that is. But going back to here, if we really are quite late in the cycle, just like back in this neighborhood when we were quite late in the cycle, this is where they go on the mainstream media. This is where they do their best to pay all of these celebrities to herd retail or as much retail as they can into the space to help to buy the top. I again have been making the argument many times around that retail might not be coming back at anywhere near the level that it used to. Largely because I think people are broke. I think people are over leveraged. I think savings are down. I think your average Joe doesn't have any money for food and bills, let alone to come in and buy your meme coins off of you. But that doesn't mean they're not going to try their best to whip this thing into a frenzy if indeed we are late in the cycle. Now, if this is flat wrong, okay, and what comes next is a big sort of sideways or a move down. If we're doing something like this and then the top doesn't come until 2025, right, perhaps even late 2025, if this is the case, then we will not probably see them whip the herd into a FOMO-driven frenzy, right? We will not see that. But if indeed we are quite late in this cycle, if indeed the rest of this fractal continues to play out and track, then expect to see more and more and more high-level celebrities coming into this space, touting their tokens, trying to get in on NFTs and whatever else is going on, okay? This is all part and parcel of the things I would expect to see at the tops, and at least towards the tops. So just like we've got QE that identifies as other things, right? We've got... Nah, we're not going there. In other news, we've got peer-reviewed studies that find Bitcoin owners score significantly higher on financial literacy tests. Is that really surprising? I don't think so. I don't think so personally. Nesty, the king of fractals, is hitting us up and blessing us one more time, okay? Take a look at this. Very, very similar at the top to this one right here, which led to not much of a higher high. And right now, okay, we've got the exact same structure. You'll notice all the way up. The only component this current bull run is missing is the breakout of the hard right edge, okay? Something like this, again, it would speak to being later in the cycle. It would speak to being much closer to here than people think. It would also speak to an earlier top. And again, I understand if you disagree. I understand, okay? I understand that people don't want to hear it's nearly over because they've only just gotten in back here and they're not even in profit yet, right? I understand. And of course, I'm not suggesting that I am right because I could certainly be wrong. But what I am saying is if we can get a breakout in the very near future, we should expect further upside just like we did before, and we'll be able to look back at all this with hindsight and say, you know what, that actually kind of made sense. So as I said, I don't really have a great deal to say because largely speaking, not much is happening, right? If I grab this fractal from back here and I put it here just like I did in yesterday's video, I know a lot of people really can't stomach this current level of volatility, and if we do something like this, okay, is that the end of the world? I don't think so, particularly if we get low PCE data today. I don't think that's the end of the world personally. As I said yesterday, I see people saying Nasdaq's breaking down. Well, I don't know what chart you're looking at. Honestly, I don't, because breakout, retest all the way back to here is perfectly legal, normal, and to be expected before resumption. Okay, so for now, long and strong continue to push. The Dow Jones, I will give you this, is currently firing warning signs. Not just one, but two. It's had its first daily close right here below the second angle, and it closed yesterday's candle below that second angle as well. You can decide what kind of trader you are. Okay, you can shoot first, and the moment you get a daily close, okay, you can exit the position. If that's the type of trader you want to be, that's fine. You can draw another trend line in here and say, well, that's my re-entry line. You do you, okay? But for me, what do I see? I see a gap that is now in the process of being backfilled. It's been backfilled, and as I said, all the way through this week, does it make sense that we get a sell-off, low PCE data, and a sharp reversal? Yes, I think so. I think it does. And if I have to pay a stop on this trade, it is what it is, okay? Sometimes you have to pay a stop. I could easily have walked away on a trendline breakdown, but I'm deciding deliberately to push through this PCE data, see what we get, and we've still got plenty of profit in all of the other trades, so I can afford to give this thing a little bit more space. Like I said, if this makes you uncomfortable, you can sell immediately on a trendline breakdown. As ever, you do you. Like I said, I want to see a weekly close, and we'll see what the market will give. You can also see, look, Russell 2K still holding above all the critical areas, okay? So what's the problem? Gold apparently working on a daily cycle low, so let's see if we can get the push. Silver, again, still holding above that critical $30 level, okay? So again, what's the problem? I don't see problems, really. All of the positions we've got in the members section pertaining to the metals, they're holding above their critical levels, right? Again, there's no problem anywhere. At least not yet. Dollar still holding above support, okay? So again, normal and to be expected things. 10-year yields and the 2-year yields going to react after the PCE data today quite violently in one direction or the other, depending on what the data says. So we will be coming back tomorrow, like I said, doing the deep dive. Oh, did I even cover Bitcoin? I think I forgot about Bitcoin. I mean, it's forgettable at the moment, right? It's not really doing anything. If it breaks out, then you know what comes next. And if it doesn't, then we probably have to entertain some more chop. As I said, we're going to find out tomorrow, right? We're going to find out once we've seen some weekly closes, once we've got the PCE data. I'll come back and do the deep dive. As always, on the weekends when we do the deep dive, it's about looking at the base case hypothesis and the expectation and seeing if the thing is becoming validated yet. And for all the people that are sweating the volatility, you know, they're probably... If you're sweating volatility that's not even real volatility, you probably have too much size, too much leverage. You probably don't have a strategy. You probably don't know what you're doing, okay? So figure out which one of those is true for you. It could be more than one, right? Maybe you don't have a strategy, you have no plan to sell, you don't know what you're doing, and you've got too much size and too much leverage, okay? In which case, close the flipping trade. Close the trade and relax, okay? You have to be able to stay calm if you're sweating, you know, someone was saying, oh, the S&P's broken down, bro. Like, yeah, okay, fine. But is that the end of the world that we lost this level? Was this the invalidation level? No, it wasn't. That's just the prior all-time high. We were looking to hopefully backtest that and hold it. As you can see from this fractal, if we wick it a few times into a daily cycle low and go, you know, if this little move right here is causing you to lose sleep, causing your mood to swing, causing you to be down in the dumps, then you did something massively wrong, okay? You did something massively wrong. So figure out what that is. Learn to tame yourself. Learn to tame the emotions. Learn to manage risk. And everything's going to be all right. I'm your boy Camel. Come back tomorrow. I'll see you then. And until next time, take care from me. All the best. Cheers. Bye.